Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. Today, I want to talk about why it's important to create bills in QuickBooks. We know that maintaining an accounting software is a thing that most of us do not like to do. However, you need to understand from a cash perspective where you are. So, entering bills, and when I say bills, this is money that you owe someone else, allows you to do a couple things. So, number one, tax purposes, creating bills in your accounting system, whether that's QuickBooks, FreshBooks, or Zero, helps you during tax season. Creating those bills tells your tax preparer what are you spending your money on. And that is so key because we know we want to pay less in taxes. So you need to start recording those expenses. Number two, it allows you to know who you owe. So instead of just, thinking, you're in a meeting and then you're like, oh man, I forgot that I owe so and so. The accounting system allows you to enter that bill in so you can know when to pay. Also, a lot of times we have a lot of things automatic. So, for instance, if you're using StreamYard or some other subscription or you have a membership, it's just automatic. What you can do, you can go ahead and create a bill in your accounting system in QuickBooks, even though it's not due. Create that bill, and then when that automatic payment comes through, you can actually go to that bill and say, okay, that bill has been paid. Or you can create an expense in QuickBooks or any of your accounting system because you know that you're going to pay that. So once again, you can create an expense so that expense will automatically hit your checking and then you do not have to select bill payment. Lastly, creating bills in QuickBooks. Creating the expense in QuickBooks allows you to manage your cash. So I used a previous example in the last video about creating invoices. So it's Monday, you're looking at your bank account. You want to know who owes you and who you owe. Who you owe comes from accounts payable. So when you're recording your bills, recording your expenses in QuickBooks, is there for you. So you're not scrambling. You don't have to look through emails. You don't have to pull up old bank statements. So use the accounting software to your benefit. So I want to go in depth or how, in particularly in QuickBooks, how the bill function works and also how the expense function works. So I'm going to share my screen. And so first, I'm going to go here to this PowerPoint presentation. So in QuickBooks, there are multiple ways to enter in the data. I'm first going to start here on the right-hand side with the bank feeds. Most organizations will use the bank feed and say, okay, they have made a deposit, a certain bill was paid to a particular vendor. They take that bank feed and code it to specific account. A good accounting practice is to record all of your transactions in the QuickBooks already. And what I mean by that is, like I mentioned before, if you have a subscription, reoccurring expenses, you can go ahead and record them in QuickBooks as an expense. So they're already there. This allows you to have up-to-date financials. So that's why it's important. Check. The same thing. When you're writing out checks, you don't have to wait until the bank feed comes across. You can go ahead and enter that information in. And when that check is cleared through the bank feed, QuickBooks will find it and say, I found a match. So hopefully that makes sense. I want to point that out because a lot of times people are confused about what's an expense, what's a bill. So once again, a bill is, an actual bill from a vendor, hasn't been paid. An expense is, you can think of it as it already has been paid or it's something reoccurring and you know that it's always going to come out of your checking account. So I'm going to go over to QuickBooks and we're going to go to an expense. So to do expenses, excuse me, to enter in bills, you'll go to expenses, then vendors. Yep, there we go. And when you create a bill, the accounting system does the accounting for you behind the scenes. So it does, that debit and credit and clearing and everything for you. So I'm going to go ahead and create a bill. I'm going to create it for Bob's Burger Joint. Go ahead and put the terms due upon receipt. I'm going to go ahead and leave this information alone. I'm going to say, let's see, this is meal. So this is, lunch, for staff. I'm going to put $100 and just leave it as that. And then I'm just going to go click save. And then I'm going to go to more, transaction journal. And I am going to show you what QuickBooks has done, what I call behind the scenes. It has created an entry so it can show up on your financial statements. And it should be coming very soon. So we should see the accounts receivable. I'm sorry, the accounts payable account. And then we also should see the expense account. Sorry about that. It is coming up really, really slow. So, yep. So when you create a bill in QuickBooks, and this is, or any other accounting software, this is what the accounting part looks like behind the scenes. So accounts payable is credited. So when you create a bill, it's always, accounts payable is always credited. This is an accounting thing. Accounts payable, if you want to increase accounts payable, you credit, which means that you owe somebody's money. Meals and entertainment. So this is an expense. So this was lunch for staff, meals and entertainment, $100. Now, say for instance, this is a reoccurring expense and you just want to go ahead and always put it, you just want to have it in QuickBooks so you don't have to worry about it. You can go to expense. You can go to Bob Burger Joint. I'm going to select meals, lunch for staff. I'm going to say 100. I'm going to save. And then I want to show you what QuickBooks has done behind the scenes for you. And with the expense, you're going to see the difference. So you're going to see the money out of the checking and still hitting meals and entertainment. And hopefully it should come up. So once again, there's different ways to think about this. You may say, well, Linda, I just don't have the time to enter my expenses. I don't have time to enter in bills. I say make the time because it's very important because it'll help you manage your cash. So here is behind the scenes what QuickBooks has done. When you enter this transaction type, when you enter expense, it takes the money out of the checking and then it hits meals and entertainment. So you can see the difference. When we created a bill, it was accounts payable. Now, if we create an expense, it takes it directly out of checking. You can also create an expense transaction for a credit card. Now, I want to show you, I'm going to go back to vendors. The last step when you're creating a bill in QuickBooks, you need to pay that bill. So when you pay that bill, you need to come to schedule payments. And it's low. It's going to take a while. But basically, you need to clear And yep, it's going to take me through this steps. This is a sample company. You need to clear that bill so it will show as paid. And so, your version may look different than mine. I'm just going to say no, thank you, and go back and see if I can pay it another way. And it may log me out. Nope, it didn't. Great. So I'm going to go make payment. Oops. And see if I can just put ACH. So once again, when you create a bill, you need to make payment against that bill. So when you pay, you need to make payment, and it'll say bill payment, and it says bill payment number 1. So this is the, if you're using QuickBooks checks, this should be the check number. So whatever that check number is, let's just say it's 100. And here is the bill payment. So it's saying, okay, here's the bill for $100 that we have paid. And you might want to make sure amount paid is 100. If you have paid, actually, this is a good example. This had MasterCard. So you can select credit card or bank. So we're going to go ahead and select checking. So once again, when you are creating a bill payment, you need to select what account the money is coming out of. Are you paying it through your checking account, your savings, or credit card? And you will select that account. I am going to go ahead and hit Save New. And I want to show you the accounting behind the scenes that QuickBooks has done. Go to Transactional Journal. So once again, when you create a bill, you have to create a bill payment to clear the accounts payable. And it will probably take a minute or so. And this is a step that you just have to remember. Once again, this is good accounting practice. I know, like I said before, many organizations, they don't create bills. They just let the transactions come through their bank feed, and that's when they code them. That's not good practice because you never know financially where you are unless you're manually doing something in Excel. So here is the payment. So it's taking the money out of checking, and then it is debiting accounts payable. So in order to decrease accounts payable, you have to debit. So when you're debiting, that means you're actually lowering the balance. So that means you either you paid it off or you owe less. So I'm going to stop sharing my screen. And so once again, account recording, creating bills, so important. And really it gets down to helps you with tax purposes. So it helps you record your expenses so you can get your deductions. It allows you to know who you owe in a timely manner. And number 3, it helps you manage cash. So remember, when you're creating a bill in QuickBooks, you create the bill, and then you also have to go in and say bill payment when that bill is paid. So all this accounts payable, accounts receivable is all cash related. If you need any help with maintaining your QuickBooks, you have some questions, feel free to reach out to me at services@insightfinancialindy.com. Make sure you subscribe to our YouTube channel. We have tons of videos just teaching you all about different accounting and business concepts to help you manage your business finances. I'll see you next time. Take care.